Welcome back. Hope you're having a good morning. Well, a good time to get you some derivative strategies. Chandan Tapadia joins us. Hi, Chandan. Good morning. Well, the markets are looking a little bit brittle yesterday, but how would you approach trade?
Good morning, Nigel. Thanks for having me. So again, the index has got stuck in a range and Bank Nifty slightly underperforming the broader market. However, we have seen some buying in cement, infra and Nifty IT stocks. But due to the weakness in the Bank Nifty and banking stocks, the index is slightly drifting lower. So I believe that we are again in a range slightly gone lower. On downside, we have major support near to 17,777 and 17,650. Even in the last week, the Nifty respected to these levels. So I believe the same support could provide some sort of stability to the market. But on the upside, multiple barriers are near to 18,035 to 18,130 kind of zone. So I believe that 17,650, 17,777 to 18,035, 18,130 is likely to be the broader range. And we have to play in this range. But when we talk about the Bank Nifty, the trend is now negative. It is underperforming the Nifty index from last 9 trading session until it remains below 41,250. More weakness could be seen to us 40,250 to 40,000 marks in the banking index. Now, stock specific, we are selecting two stocks which are comparatively having the resilience at the time of market decline and having the strength. First is the buy on TVS Motor. This stock is one of the strongest auto name, continuously making higher tops, higher bottom on the weekly scale. Even supports are gradually shifting higher, which clearly indicates potential for further 3 to 5% rally in the counter. So recommending to buy on TVS Motor with a stop loss of 1105, looking for upside move to us 1175, 1180 level. Second trading idea, that is from the IT pick. Nifty IT is comparatively doing well, and a stock like Persistence, Tech Mahindra, Coforce are supporting the market sentiment and moving on upside. So Persistence we like the most, one of the strongest counter, which is up by around 10% in this series, trading higher than volume weighted average. As we are into the expiry week, short covering also cannot be ruled out. So recommending to buy on Persistent with a stop loss of 4,900. Here we have a target towards 5,300 to 5,350 on the higher side.
Okay. All right. Chandan, have a good day. Thanks a lot for joining in. That's on the F&O space. By the way, the pre-opening rates are just about settling. And it's all over the place, really. So the Nifty is up about 200 points, but we'll wait by for those rates to adjust. I think Bharti Airtel, you can expect that stock to be in the green after the news flow there. So Bharti is now up almost about 1.5%. Would be interesting to see what's happening with, some of these names like Minda Corp that could perhaps be under a bit of pressure. So keep an eye out on these stocks. But Triveni Turbine is a stock on a momentumizer segment this morning. My colleague Surbhi is joining in. She's going to tell us about that. Surbhi, over to you.
Thanks for that. The stock on my radar today is Triveni Turbine. The stock is currently trading at close to 300 rupees. Just in the yesterday's trading session, the stock was up 5%, and in the last 6 months, the stock has gained a little over 50%. In fact, the stock is making higher highs for the last 3 trading sessions. It has a strong trading and delivery quantity. Just yesterday, the delivery quantity was close to 8 lakh shares, which is 3 times the average, and the traded quantity was close to 33 lakh shares, which is again 3 times the average quantity. Now, a little about the company. It is a leading player in 0 to 30 megawatt industrial steam turbine category with 50% market share in the domestic market and 20% market share in the global market. Recently, the company has posted Q3 earnings, and it was a very strong performance. The revenue was up 45% on a year-on-year basis, which was largely led by exports, which was up 120% on a year-on-year basis. EBITDA was also up 40% on a year-on-year basis. Their order book is an all-time high of 1,230 crores, which is 1.1 times trailing 12 months revenue, which gives good revenue visibility for FY24.
Okay, got that. Thanks a lot for that, Surbhi. Prakash, what's your view? Triveni Turbines, have you tracked this one?
Yeah, of course. And we've seen this entire corporate restructure that happened, post which you've actually seen a lot of momentum building in. But, I think it's well priced. If you ask me, the appreciation in the recent past has actually discounted it in terms of all this future growth. But, the time to buy something like this is when it is just starting to improve. Here, it's already proven its improvement. So I love the space, though, Daniel, not taking away the fact that this is the pocket to be in. And there are lots of good companies in that space which will probably start emerging as promising. Yeah.
Okay, I wanted your thoughts also on Samvardhan Madison. After the acquisition of SAS, there are a lot of brokerages that have raised their estimates on Samvardhan Madison. CLSA says that SAS, the acquisition has added new capabilities and the valuations are very attractive. So Samvardhan gains access to the largest EV OEM player in that space. So at this price, Prakash, do you think there's more upside for Samvardhan Madison post the acquisition?
No, Sonia, this is a typical case with acquisitions which are so promising. Here, the two factors. One is it's EPS accretive from day one, which is exceedingly heartening. And the second is the capital allocation will take some time to start reflecting into a scale up. Like any other acquisition, they would have. It's a significantly large operation that they are adding on, and it's a new area that they are adding to their product mix. So that's going to take a while for the effect. So I am quite positive on that. But the more promising part is the wiring harness business. If you actually see the synergies with the global businesses where they have so many new OEM relationships and things opening up, is going to be exceedingly promising on the wiring harness business, which is actually very undervalued. I mean, right from the time they split, they demerged these businesses, I don't think that's gone anywhere. So at that 50-52 mark, I think it offers far more risk reward, which is better than the other Samvardhana Madison stock at this point in time. But yeah, I mean, both of them are positive. The acquisition is positive, but it's going to be a long haul for it to start getting captured in its P&L sales.
Okay, all right, Prakash, we'll leave it at that. Thanks a lot for joining in. Well, let's do one thing. Let us just take a quick look at what's happening in the pre-opening rates now. Adjusted higher, so looks like it's going to be a good start. The Nifty is up about 100 odd points, led higher by IT names. Remember, IT has been the best performing space this year. HCL Tech is already up 10% for the year. Looks like it's going to be up another 1.5% today. Infosys is in the green as well. M&M has been a very strong stock, up 1.5% in pre-opening. And a couple of the other names from the consumption space, you have Titan, HUL that are in the green. But let's put focus on the pharma space now. Cinderella Carvalho, the Vice President Healthcare at GM Financial, joins us now to talk about that. Cinderella, thanks a lot for joining us. There's been a lot of pressure pockets in the pharma space, whether it's Cipla with the Form 483 and the US FDA observations, or even Divi's, which has been under a lot of pressure. But you tell us, what's the overall call now on the sector, and what are the stocks that you would avoid, and what are the stocks that you would own?
Thanks for that. So I think, yeah, sector always remains quite active because we have regulatory aspects, we have, compliance on the facility sides. So a lot of news keeps flowing and keeps the sector very active. However, of course, we prefer Sun Pharma and Dr. Reddy's from our large cap picks. And from the perspective of the mid ones, we like IPCA. At this point in time, on the biosimilar side, we have Biocon, which we are looking at this price given the price correction. Of course, there are many levers out of which even one comes out, we'll be very pleased to see the earnings moving up. And coming to the other segments like the diagnostic and healthcare also, I think we've seen a lot of price correction, and we are looking at the Dr. Lal and Metropolis in terms of our picks over there. And on the hospital side, we're looking at Medanta. Basically, that's what we have initiated recently, and we are looking at that as our topic from the hospital segments. Those are the stocks that I prefer at this point in time.
All right, Cinderella, but any view on Divi's Laboratory? The numbers were very, very weak. Margins came in at multi-quarter low, and the problem was the management said they still require a couple of quarters more to get their act together. Any view on that particular stock?
So Nigel, we don't cover it officially, but what I understand from the conversation with the management is that, yes, because it was high base quarters for them, right? Because they had a high contribution from a pandemic drug that which we all are aware about. And given that that has created a very huge base for them, it will take some time to normalize. However, management remains very optimistic about the future, and they would need, because another quarter is also a high base quarter for them, Q4, and in that terms, even Q1. However, some support is expected to come in Q1, largely due to the custom synthesis contracts, which management has alluded that they will be starting those soon. So that will provide some support, but we have to keep in mind that there is a high base that has been created and that will linger for some time. And that's why, 1 or 2 more quarters is what we are also seeing from an earnings trajectory moving upwards from a year-on-year growth perspective.
Okay, all right. Cinderella, we'll let you go on that note. Thanks a lot for joining in. Well, that's on the pharmaceutical space. But in pre-opening rates, I just wanted to, point out a couple of these power names are doing quite well, whether it's Tata Power, Torrent Power, NTPC, all in the green right now. You have Adani Power that's also moving up about 2.5%. BEML has, signed an order for the Bahrain Metro Rail project. So BEML is in focus. GR Infra has emerged as the lowest bidder for 2 NHAI projects. So GR Infra is also in the green. Bharti Airtel, of course, has hiked tariff plans in 2 additional circles. So that stock is also up and about. And then you have Interglobe Aviation, where the air travel has picked up to a record high. So Interglobe Aviation also looking pretty good. But let's get some 9-10 calls going. So Darshan, looks like the start is going to be mildly in the green. What's the big call at 9-10?
Well, if it's mildly in the green, if it stays, take an intraday trade on the long side. Wait patiently and see the market first. ONGC is a buy with a stop under 119.
Okay, thanks for that, Sudarshan. Mitesh, what about you?
I'll go with the buy on Ultratech Cement. Keep a stop below 73.50. Look for targets around 7,600.
Okay, all right. Well, Nimesh is joining in to tell us what the Standout brokerage report is for the day. Nimesh, over to you.
Hi, Sonia. So today's Standout is on capital goods. Interesting report from UBS. They've initiated coverage on 4 stocks. That is Cummins, ABB, Siemens, and BEL. I'll start with Cummins first because that's an anti-consensus sell call from UBS and Cummins. They have a target price of 12.50, and they believe the risk reward is turning adverse for Cummins going forward. The key risk includes upcoming emission standard changes, normalizing demand, and impending growth risk, which have been underappreciated by the market. So anti-consensus sell on Cummins. The second stock is ABB. On ABB, they've initiated coverage with a neutral rating and a target price of 3,600. They believe ABB has enough margin levers in place for going forward, and they expect company to set growth on good leverage on the existing business model plus the new growth strategy. So they are bullish on ABB, but they have a neutral rating with a target price of 3,600. The third stock is Siemens. On Siemens, they've initiated with a buy rating and a target price of 3,900. They believe this is the best in terms of growth cycle which is underway for Siemens. In fact, there are 3 reasons why they're bullish on Siemens. One, they expect the company to see a potential double-digit growth in terms of order inflows going forward. Second, they see a $10 billion opportunity for Siemens in the near future. And 3, they see a high competitive management as well. So they're very bullish on Siemens with a buy rating there. And the last stock is BEL. Again, on BEL, they have a buy rating and a target price of 125. They see a robust $25 billion already pipeline for BEL until FY25. And over the next few years, so by FY30, they see a defense opportunity of close to $30 billion, which is currently 15 billion. And they see a big potential for BEL going forward. So they're bullish on BEL and on Siemens, but they have an anti-consensus sell call on Cummins.
Okay, thanks a lot for that. That's huge, a $30 billion defense opportunity for BEL. Mitesh is back with us. Mitesh, before the markets open, any of these defense stocks that you like, BEL, BEML, constantly in the news, order wins are picking up. Technically, is there still, some upside here?
I think HL in the short term technically is the best place, and BEL also something which I like because the stock has gone through a correction and now I think waiting for some kind of reversal signal. I think once the stock starts capturing 101, 102 levels on the upside, then I think you will see a very strong up move emerge. But I think till then it's not something which is showing great strength in the short term. Of course, it can move up to about those levels and then maybe settle down around 100 odd levels.
All right, Mitesh, thanks very much for that. 3 minutes to go for the market opening. It's the pre-open is settled very nicely, 60 points higher. Let's revisit some stocks. Bharti is in focus. Rima is back with us to put the spotlight on it once again. Rima, hi, morning.
Hi, good morning. So Bharti Airtel has gone ahead and increased the entry-level prepaid tariff, the minimum tariff, in 2 more circles. These 2 new circles are Maharashtra and Kerala. With this, Bharti in the last couple of months has increased the entry-level minimum tariff in 19 out of the 22 circles. So 3 circles are still left. Once they do that, it will be a pan-India entry-level tariff hike. But remember, since this is a lower-priced plan, although this price hike is very steep, from 99 rupees, the new tariff, the minimum tariff plan becomes 155 rupees. Because it's a lower-priced plan, according to Morgan Stanley, the overall revenue benefit to Bharti's India mobile wireless business will not be that significant, just 1.3 to 1.5%. The bigger trigger will be a 4G tariff hike, which are the higher-priced plans. But this is a positive step, and competition so far has not followed. Back to you.
Oh, okay, all right, Rima, thanks a lot for that. Vivek joins in to quickly run us through the power sector and the news flow out there. Vivek?
Well, that's right. So the power sector expected to remain in focus. Remember, in keeping in mind the anticipated spike as far as demand is concerned in the upcoming summer months, the Power Ministry has gone ahead and invoked Section 11, which basically means that under emergency measures, power plants will be allowed to go ahead and import coal from outside of India, and they will be allowed to do a cost pass-through of these excess charges that they will incur. Which are the stocks that will remain in focus? Mainly Tata Power as well as Adani Power. Remember, Mundra coal plants operate on imported coal facilities. Lastly, also keep an eye out for IEX. In anticipating excess demand, the Power Ministry has also allowed them to go ahead and sell excess power on the exchanges.
Very helpful. Thanks a lot for that. In fact, all the power stocks are now moving in the green. Just about 15 seconds left for the market to open. Looks like it's going to be a positive opening. But remember, the Nifty has been facing resistance at that 18,000 mark. It has closed below the 20, 50 and 100 EMA yesterday. So let's see if there's any attempt to get above those levels. For now, the first tick on the index is mildly in the green, up about 40 odd points on the Nifty. The mid-cap index is up about 60 odd points. So decent opening, you'd have to say, for the market this morning. Let's take a look at what is leading from the front. By the way, the advance decline ratio is solid in favor of the advances, almost 1,150 stocks. And all the power names, that Vivek was also referring to a while back, NTPC, there is a couple of the others, Tata Power, Torrent Power, all looking pretty good this morning. But NTPC is your top Nifty gainer, up about 1.5%. Adani Enterprises is up about 1% as well, followed by HUL, Cipla, M&M and Adani Ports. Hero MotoCorp is up in the green. The management met with the Citi group of analysts, and there was some positive commentary that came in over there. So keep an eye out on that. And IT continues to hold forth. So Tech Mahindra, Infosys are all in the green right now. HCL Tech as well is up about 0.2%. So what's lagging then? You have Apollo Hospitals, a tad bit, Eicher Motors, a little bit of profit taking there, IndusInd Bank, Axis Bank, ICICI Bank. So banks have generally been on the back foot. The bank Nifty, in fact, is falling further. It's now down about 50 points, 60 points. Remember, the bank Nifty has lost 5% in the last 1 month. So not looking good over there. But largely, you'd have to say, the market is holding afloat above the 17,800 mark. On the upside, led by IT, and on the downside, banks are a bit on the back foot. But otherwise, nothing too much in the market opening.
Well, that's right, Sonia. The problem was we started with the gap up, which was an issue. You don't want to start with such a big gap up because it's giving the bears a perfect shorting opportunity, and that's why we've come off close around 30 points from the high point of the day. ACC and Ambuja, yesterday in the final hour of trade, there was some pre-buying that we saw at around 3 p.m. odd. There was a bit of an uptake out there. But today we have that positive news flow that's come about, that in Himachal Pradesh, operations will restart yet again. So you see ACC and Ambuja, both of them are higher. Nykaa, just keep an eye on that one. It had a good close yesterday. And today as well, volumes in the first couple of minutes itself are very, very high. So keep an eye out on that one. NMDC Steel, that was the new venture that listed yesterday, the demerged part of the business. Well, that in fact is seeing an upper circuit yet again. It's up close to around 5%. Yesterday as well, post its listing is up around 5%. The street is hoping that there can be some kind of a divestment that will take place out here. So that's opened up in the green. NMDC as well is up close to around 2%, and NTPC as well. So some of these PSU names, they have done pretty well, in the first tick itself. The Nifty Bank is down close to around 100 points odd. And a couple of other notable movers today. Pyramid Enterprises is opening up with a cut of around 1.5%. And Shree Cement as well is up close to around 1.5% odd. Now we're up only around 20 points odd, so we're shaved off close to around 45 points from the first tick itself. Prashant.
Nigel, so quiet kind of start, right? 26 points, 17,870 or so is where we are red, but there is some green off the highs already. Just 2 minutes into market open. Just a few other names. Adani Power is up about 3.25% or so. NTPC we highlighted is up about 1.5%. Nykaa, we highlighted big move, I think, on Friday and then yesterday, 1 3/4 again this morning. Varun Beverages is coming up with a decent move, 2% on Varun Beverages, 1340 or so, large volumes. KPIT Tech was a mover yesterday. That's again about 2% higher. There is NMDC, which is up 2%. Triveni Turbine is up about 3%. GR Infra, which is recently, not very recent, but newly listed entity, 4% higher, coming up to almost 1200 on decent volumes. Zentech continues to move higher, 3% this morning also. And there is BEML, Shilpa Medicare, big move up on Friday, big move down yesterday, and this move this morning, it's starting a little higher as well. Delivery is up another 2% or so. Policy Bazaar, PB Fintech is up about 1 1/3% as well. Market breadth is slowly but surely inching up to being almost 2:1 in favor of advances. So we'll see how this one shapes up. Adani Enterprises was the top Nifty loser yesterday. It is down 2% this morning. Then Adani Green is the other one, which is down about 4 1/4%. And nothing else. I mean, it's kind of slow. Cummins India is down 1 1/4%. Adani Total is down another 5%. That's limit down for the limit down today. Sonata Software is down about 1 1/4%, 1 1/3%. I can spot Adani Transmission, which is down 5%. Minda Corp, we were discussing this earlier in the morning, starts about 1% lower, but volumes are thin. And ABFRL is another one I can spot, which is down about 1.6, 1.7% as well. Sonia?
So the theme this morning on the upside is mid-cap IT. All mid-cap IT stocks are doing well, right? Whether it's Persistent Systems, whether it is Coforge, L&T Tech, and KPIT Tech as well. And these are stocks which have already gained about 20% this year. KPIT Tech is up 20%. So it brings me back to that article which our team put out, about the kind of outperformance that IT has seen after a decade of decadal slowdown that we saw last year.
No, absolutely. I mean, IT, mid-cap IT especially, I think did well on Friday, did well yesterday, and I think that kind of continues. The move continues this morning. Vineet Samre is joining us now. He's the market master of the day, head of equities at DSP Investment Managers. Vineet, great to have you with us here. Thank you very much for your time. I think last we spoke was bang in the middle of the earnings season. Now we've had some time to look back at the earnings season and hear management commentaries, etc. How is the view shaping up, Vineet, in terms of the underlying demand conditions and what it means for markets from here? Go on.
Yeah, hi. So I think clearly, when we look at the earnings, I think the earnings season has just got over. And looking at the commentaries of the management, it is quite clear that, the consumption has been a bit sluggish at the moment. And what most companies are sort of facing is, heightened cost across the board. So while companies have done well as far as the overall sales growth might have concerned, but when we look at the profitability margins, there is a impact on the profitability, which means that and this is across most segments, excluding the banking sector as such. So I think as far as we are concerned, this is leading to some bit of downgrades in the earnings for the current year. But also, one has to remember that this creates a low base as far as the earnings are concerned for largely consumption as a category, let's say. And also, if we believe in the mean reversion theory, and as the world goes through a bit of recession, these commodities which are hurting the profitability should cool off a bit, and that should then again lead to expansion. So maybe 2 quarters we will have some pain, continuing. But after that, we should see the profitability improve, and that should, lead again for the upgrade as such to start maybe 2 quarters down the line.
Are you raising your allocation to IT now, both large cap and mid cap, Vineet? I mean, we've seen a decent amount of pullback from the lows. Your thoughts here?
So IT, I've been sort of maintaining that the long-term view continues to remain positive for the sector, given the fact that Indian companies are pretty competent, and a lot of the change which is taking place in terms of the digital shift and in terms of the cloud-based shift. I think those we are playing an important role. But I think what we are sort of dealing with is how the recession itself is going to shape out, and depending upon the news flows which are coming out from the developed market, I think the IT sector is taking the clues from there. The current environment seems to be suggesting that the recession itself may not be so deep, and it will not cause a big sort of pain, and which is why we've seen this short rally in the IT sector, especially the mid caps, where the promise of higher growth is slightly visible there. So for us, I think the overall outlook remains positive, and depending upon the valuations, we would be open to look at companies at a price point at a level of comfort. We would be open to look at a few of the names out here.
Hi Vineet, good morning. I recall that in October you had taken this contra call. You said that IT stocks, some of the valuations have looked far better in comparison to what they were, and that's why you'd be looking to buy them on dips. Similar is the case with pharma. The problem is pharma hasn't really bounced, and as of now, it's not on anyone's radar. It's lost its mojo, so to say. What's your view on it? When things are looking so gloomy, do you believe at some point of time some of these stocks will start looking up? Because the disappointments that we saw in the past quarter from pharma names itself was quite large. Go ahead.
So in fact, I believe that this year and maybe for the next 2 years, the pharmaceutical companies are likely to outperform the most of the other sectors. And I think the simple logic out here is these companies have seen earnings getting impacted because of the higher cost. The growth itself in their international markets have been slow. So I would say that again there is a low base creation which has happened in the sector. And if you look at the other fundamental metrics, which is the cash flow generation, ROEs have got impacted, but I think they're still decent, upwards of 14-15% for most companies. Valuations have also come off. So I would 100% agree with you that this is a good time to have a contra view on the pharmaceutical sector, because the demand is almost non-discretionary in nature. So when the demand actually comes back and we'll have some benefit of the raw material prices cooling off, there could be a bigger change as far as the earnings are concerned. And I'm sensing that this will likely take place over the next 1 year or so. So I think with that in mind, having a slightly longish horizon for the sector, one can definitely look at incrementally allocating capital to the sector.
Okay. All right. That's on the pharma sector. So, you spoke about IT, you spoke about pharma. One space that has been hit quite hard over the last many months is consumption. And now the feeling is that, spending power will get compromised further as rates are moving higher, and globally as well. Perhaps we're heading into a recession. There are layoffs across sectors. Do you think that could hit consumption and FMCG in a big way? And if yes, would you cut back on your allocation there?
So, we are actually looking at some of the data which helps the overall consumption demand. And we looked at the 9 months results for the corporate India, and we looked at the wage growth. So I think the wage growth for the 9 month has been 17%, which is a very robust number as such. And the other data point which we are also monitoring is the rural wage growth, which is also inching up. Beyond that, I think we have the MSPs for the agri products being pretty reasonable in the current year. So I think all of this actually gives us some good feeling that at least on the income front, things are not looking as bad. And it is a matter of time the demand should sort of come back, because I think the overall consumption story in India is a long-term story, and that we are very strong believers in. Now, because of the higher interest rate inflation, I think people maybe just, they might have pulled back in terms of their spend habits, might have also changed a bit, but those will sort of normalize and come back. We have seen within consumer discretionary, auto has seen a smart recovery as such. So I think wherever, people are willing to spend, they are spending, and it is some places where they have cut back on spending, which I would imagine should sort of come back maybe with a delay of 1 or 2 quarters. So I think there will be pain for 1 or 2 quarters, but we are not taking a view to cut back on our consumption consumption story stocks. But in fact, we are looking to add into this the next 1 or 2 quarters of slow growth environment where the valuations are actually becoming reasonable for few names.
Okay. All right, Vinny, thanks so much for stopping by and giving us your quick take on the markets as well as individual stocks that we discussed. Look forward to having a chat with you rather soon. But let's focus on the cement space. Stocks have been gaining in, in trade in the last couple of days or so. Reports indicate that some companies have gone ahead and increased prices by around 5 to around 15 rupees all across the country. Mr. Rajneesh Kapoor, the COO of JK Cement, joins us on the show. Hi, Mr. Kapoor. Thanks so much for joining in. Well, you predominantly operate in North, some parts of West as well as South markets. Could you tell us, has there been a price increase? If yes, could you break it up geography-wise?
Yeah, good morning. So primarily, yes, there has been an attempt of price increase, and we can say that in North, we see about 10 rupees of price increase has been taken. But when we look at an average kind of a thing, by the time this month ends, I think we will be looking at about 7 odd rupees of price increase in North. That is, I'm talking per bag price increase. And in South, I think it is slightly more, maybe around 10 rupees price increase can be seen in South as the month averages out.
Okay, so you're saying that in North, 10 is being pushed through, but you think 7 will get absorbed, right?
See, what has happened is that we have taken a price increase of about 10 rupees has been taken, but since it is only happening towards the end of this month, an average impact in the month of Feb you can expect is in the region of 5 to 6 rupees.
Got it. I just wanted to ask you, sir, there is both the Adani Group companies, that's ACC and Ambuja Cements. They were not selling in Himachal Pradesh. Their units were shut. Do you have any exposure in Himachal Pradesh?
So we don't have any no exposure in Himachal per se. It's quite far from our plants. So we didn't get much impacted by that. But of course, some of the other markets in Punjab and all, they do come, but it's primarily Himachal is the market where they were which was impacted by Adani Group not operating.
Mr. Kapoor, the reason I ask you this is the fear is they'll start ramping up capacity and they'll start supplying in the neighboring regions as well, and that could put pressure on prices, in other parts. Do you believe that that will hold, or do you believe that no, demand is strong enough, so these price increase will be absorbed even if ACC and Ambuja ramp up?
No, I'm not much worried about that. Primarily, I think because I don't know what Adani has done, but if I was in their place, I would have ensured that the markets where they were losing because of Himachal plants getting closed, they would still supply to those markets even at a higher logistics cost. So it's a big, ACC Ambuja is a big company and they have multiple plants. So, and also March is the right month, February, March is the peak months where we expect growth to be substantial. And therefore, I don't expect any major impact, coming because of their plants getting operational. Yeah.
All right, so you're not too worried about competition. Since you said that February, March is the major months when demand comes through, I think in the last time we spoke to you as well, you said that there is a lot of pre-election demand that's kicking in. Earlier, there was government capex. Now, private capex is also picking up. And you have, the rural market coming back. What does all of this mean in terms of volumes for you? What can you clock in by the end of the year and in FY24? And in general, what's the trend looking like?
So for us as a company, I think we are looking at over 20% growth in volumes. I'm talking of grey business. We should be clocking close to 14 million tons in this year. And next year also, we are very positive. And I think we should get about 2 million tons of growth in next year. Primarily because we have got 2 more operational plants. We've got an integrated plant in Panna and a grinding unit of Hamirpur, from where we have started getting very good traction. So that I'm talking per se for JK. But when we even look at, industry and we look at FY24, the current, increased allocation by the government in the current budget for, for roads and highways and for urban, development, things like that. All NHAI and MORTH both have got substantial increase. So we expect a lot of growth coming from there. In rural also, we have seen that PMAY Grameen has seen an increased allocation even as late as November 22. And there is still an headroom for number of houses that need to be made in rural. So I'm quite confident that in the coming year from now and to the FY24, rural and infra would really push it. Industrial is not going to lag behind because there are a number of, manufacturing operations who are trying to come into balance out the performance-linked incentive schemes and other things. Yes. So overall, I feel that next year we should see close to 8% growth.
Okay. Sorry, you said 14 million tons. 14 million tons this year. That's FY23, right?
I'm talking of JK. Yeah.
Yeah, and you said 2 million tons next year growth.
Yeah, approximately around that region.
That's about 14-15% in FY24.
Yeah, absolutely.
Okay, okay. Is there, by the way, just to understand, is there a election impact? Have you seen that? Because lots of state elections this year, next year general elections. Analysts say, well, that's a good thing for spending overall, and cement perhaps also benefits. Is there any historical evidence to support this, both in terms of volume, offtake, and pricing?
Volume offtake, yes. So we have seen that over in the past elections, when we go back to the past general elections as well as state elections, we have seen that there is a tendency of, more, a lot of projects which, can be pushed to complete. So those kind of things have happened. And therefore, we are anticipating a fairly decent growth in the year of FY24. Price, of course, depends on number of other aspects in terms of, how is the demand supply gap. Generally, if the demand is good, price should go up. But then there are various competing factors. So therefore, one can't very accurately predict that the price is going to go up. But certainly, volume increase is really anticipated. However, we see a bit of a cooling off in terms of the input fuel cost and other things. And therefore, even if there is a marginal increase in price, I expect the industry EBITDA per ton levels to start improving from the next year.
All right, Mr. Kapoor, then let's get straight to the point. Volumes are picking up, pricing is gaining traction as well, and demand is rock solid. And add to that, the sweeteners coming in, that raw material costs are cooling off. Putting all this together, what is the EBITDA per ton guidance from here on? You warned us in Q3, you're sitting on some high cost inventory, which will hurt the profitability. And that's precisely the way it played out. You all have given a number of around 680 rupees per ton of an EBITDA per ton. But putting all this together, how much of an improvement can we see on an EBITDA per ton basis?
So I think so, I'll break this question in two parts. One is the Q4 and the next year. Next year, we should certainly see substantial improvement in the EBITDA per ton across the industry. And I can say that maybe 100 to 200 rupees one can visualize straight away. For Q4, if I come specifically to my company, while I have done away, my high-cost fuel inventory has now almost finished off, and I expect the fuel cost, which was 2.6 rupees per 1,000 kilocal, to come down to about 2.4 rupees per 1,000 kilocal. However, I am also at this point of time in the process of ramping up my new plants in Panna and Hamirpur, where my new plants are getting more, and some of the elements like waste heat are still coming up, so those things will reduce the cost post-March for us. In terms of this month, this quarter, we see an increase of maybe about 100 odd rupees as compared to last quarter. But there are substantial, investments we are making in terms of building up our brand in the new markets by spending more in terms of branding, as also optimizing the performance of the Panna and Hamirpur plants.
Okay, all right. So from around 680 for this quarter, you should head closer to around 800 rupees odd.
Yeah, I think that would be a fair estimate to give. Yeah.
And in FY24?
Price increases also matter a lot. If the price increases roll back in March, of course, the commentary then changes on that.
But give and take everything, you'll be closer to around 100 rupees higher from here, will be closer to around 800 rupees. And at some point of time in FY24, putting all that you said together, you should be heading towards that 900 to 1,000 rupees, which we were not doing too long ago. Second half of the year, first half of the year, we get to around 1,000?
I think I am optimistic even from the first half, because my new plant efficiencies are going to come in from the first half. If the fuel prices stay the way they are or get marginally down, then that is already there, and then maybe we expect a little bit of price increase in the next 15-20 days. So that should help us. I think the overall industry average should also go up by 150 to 200 rupees in the coming in the first half of next year.
Okay, so you spoke about this 14 to 15% volume growth in FY24, and you spoke about how demand is very strong. Do you have any additional capex plans over and above what you've announced? I think you have a capex of 1,160 crores that you've already put into motion to expand your capacity of 5.5 million tons. Can you tell us anything over and above that? And if yes, what would this mean for your debt profile?
So, firstly, our current capacities of 2 million tons of Panna and 2 million tons of Hamirpur are getting operationalized, and our current first objective is to get these to start getting a very high capacity utilization for these two plants. In addition, we have started our grinding unit work has already started in Ujjain, and that work is already in progress. In terms of debottlenecking, in another couple of years' time, we are expecting to come to 25 million tons. All that work is on. And I think overall, if you see, our debt should peak in the next couple of months to slightly over 4,000 crores, which would be a debt equity ratio of about 0.6, 0.65. And post that, I think we should see the debt level start reducing.
Okay, so that's from 2,800 crores currently, or 2,870 crores thereabout. You're saying the debt will rise to 4,000 crores. So do you have...
I am talking of JK consolidated, taking care of JK Sem and JK. Our consolidated gross debt at this point of time is over 4,000 crores. I'm not talking about JK standalone.
Okay,
So Sonia is referring to the net debt, sir. The net debt number that you all have disclosed on a consolidated basis is a little under 3,000 crores.
Yeah, so that stays. That point stays. So that would peak up by another 100, 200 crores in the coming, next couple of months as everything gets capitalized in my new plants. And post that, we should see that easing down.
By how much, sir? Say in FY24, what kind of a reduction could you be looking at?
At this point of time, I would not like to give an exact number to that because I've not really worked that out. But I think we should see a reasonable amount of reduction. It also depends on what kind of an year comes in the coming.
Okay, all right. You know, I've taken your consolidated numbers and deducted the the standalone, and the EBITDA derived number is actually a loss. I think that's for your UAE operations. The UAE operations, I guess, for the past quarter was struggling a little bit. Was there any kind of one-off, and do you expect it to turn around in the coming quarter?
I'm sorry, on UAE operations, I can't comment much. What I know from my, inputs that I have is that UAE operations are doing pretty well now. So, but otherwise, I can't comment on this one-off of UAE because that is not the area of business that I look into.
Okay, I have to ask you about this proposal of cutting the GST in the cement sector from 28 to 18%. Of course, it'll be very good for volumes, I'm sure, but how much? What's your best guess? And do you think it could cap prices?
Certainly, I think moment the GST relief comes in, it goes without saying that much of benefit will straight away be passed down to the customer. And if the customer is paying less per ton of cement or per cubic meter of concrete, maybe it will encourage some more fence sitters to come in and get in for their project. Especially I look at the lower income and middle income group people who would then be more encouraged to go in for construction of houses. But having said that, you must keep this point in mind that in an overall construction of a building, cement accounts for a very small percentage, and therefore steel and other things also matter a lot in that.
All right, we'll leave it there. Always a good conversation, Mr. Kapoor. Appreciate you joining in and running us through that perspective. So that's JK Cements for you. The market's just ticked into the red. We're down about 3 points, 4 points. Market breadth is also very inconclusive. Almost 1:1 is the advanced decline. 960 up, 960. I mean, actually, exactly 1:1. I don't see that very often. We'll take a very quick break here. We've got an interesting conversation lined up with Ankit Agarwal of Sterlite Tech to discuss their third quarter numbers. And later in our special segment, Charting Trends, we'll speak with Mitesh Thakkar to decode charts, technicals, markets, and of course stocks that Mitesh would want to talk about.